I can see clearly now, the rain is gone. I can see all obstacles in my way. Gone are the dark clouds that had me blind. It's gonna be a bright, 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 sunshiny day. It's gonna be a bright, bright, sunshiny day. I think I can make it now. The pain is gone. All of the bad feelings have disappeared. Here is that rainbow I've been praying for. It's gonna be a bright, 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 sunshiny day. Look all around, there's nothing but blue sky. Look straight ahead, nothing but blue I can see clearly now, the rain is gone. I can see all obstacles in my way. Gone are the dark clouds that had me blind. It's gonna be a bright, bright, sunshiny day. It's gonna be a bright, bright, sunshiny day. Gonna be a bright, bright, sunshiny day. Oh, what a bright, sunshiny day.
Good afternoon, everyone. And I almost forgot. I kind of lost track of where we were in the week here. And it is, let's just go here. It is Wednesday at about 12:16. And we'll try our best to pop in, Monday, Wednesday, and Friday about middle of the day. We'll try and be available to answer any questions you might have. And did you catch the jobs number? Did you tune into CNBC, watch some of their commercials, and get all the data on the jobs? And oh my goodness, the Bureau of Labor and Statistics, they rewrote the jobs numbers from the cooked numbers that they punched up over the last year. Oh, there were, we're actually 880,000 jobs less than oh, Jesus. Of course, they wait until everyone took credit for the jobs number, the cooked numbers that were in front of it. We don't, I say it obviously tongue in cheek, right? I don't, you can believe what you want to believe in who you believe. I don't want to challenge anyone's belief systems, but we don't do what we do here day in and day out because I believe any of the crap coming out of DC. My God, no. And I certainly don't believe anything coming off of the media, far from it. And so I'm not about to make any kind of trading decisions or investment decisions based on any of that. Just not going to happen. What we are going to do is we're going to track the money flow. Because if there is one overriding principle, I don't care if you're Donald J. Trump, I don't care if you're Barack Obama or Pelosi or whoever else, is up on that stage, they all want to protect their bread. They all want to protect their lifestyle. It's going to be a little bit more difficult for some. in a few short months, whoever that is, because one group isn't going to be able to sell the influence that they've been selling, and they're going to have difficulty if they have no discernible skills maintaining their lifestyle. Isn't that a shame? We'll cry. Very, very sad. I could care less, right? And you probably do too. What we're trying to do here is just to monitor on an intraday basis on the field the money flow. And we're going to move in and move out and extract, cash flow and salt it away, collect these things called dollars and deploy them as we see fit into something else that hopefully holds value. And one thing that holds value is education, though, right? There's the old saw that that can't be taken away in some critical thinking. But I'm not going to ramble on. God knows I could. Although I hope you're hearing the news that not that I'm a huge fan, but you know what? I did read his book about the COVID fiasco. If you haven't read it, it's a very, very good book, very, very detailed, surprisingly so. And but if you haven't heard, RFK is expected to endorse Donald J on Friday in Los Angeles, and I think that's a big deal. I do because he's not Ross Perot. He doesn't have 19% of the votes to keep anybody from getting in, as Ross Perot did for George H. It may have been a blessing, but he probably does have a 5, 6, maybe 5, 6, 7, 8% of the middle, and may have some some on the fence. And I think that I think it's a good thing. Supposedly going to be promised a cabinet level seat. Could be anything. Could be housing, education, and welfare, attorney general. I think I think it would be fitting to make him head of the CIA. Maybe get a chance to smash it into 10,000 pieces as his uncle wanted to do, and maybe even his father. Wouldn't that be fitting? So the deep state, I hope they have private security and don't rely upon upon the others. And I think it's going to be interesting. It's certainly from a market perspective going to be very volatile. And I understand that the jobs number is going to be rewritten, though. It's going to be revised again. They're going to have another big revision, come January. So you can imagine what that'll be, depending on the outcome of who's sitting in the White House. But that stuff really just doesn't matter, right? It just doesn't matter, especially when you're up close. Now, if you're making an investment that is going to go out, beyond a year, a long-term gain. Even here for Susan and I just want everyone to know we're going to use technicals. We're going to look at money flow, but we're also going to use some fundamental analysis. We most certainly are. And we cover that in the Q school. In broad strokes, I want both a company and an industry, but I want increasing revenues. I want increasing earnings. I want new products coming out. I want institutional sponsorship. I want good management. And I want a good, thriving industry. And I also want to have a view of the overall market too, of where we are, because a rising tide will raise all boats and a lowering tide will lower all boats. So I don't want to come in and plow my IRA account, our retirement, our future. I don't think anybody should into one company or into one industry and just throw caution to the wind and just say, hey, I'm in, and let's come hell or high water, and I'm gonna buy and hold. And I'm not going to do that. Also, though, when we make those investment decisions, and those are investment decisions, that is different than trading. It most certainly is. And we have to have, was talking here, I don't want to be talking at anyone, talking here, we need to have a different mindset, a different vantage point. And what I'm not going to do when we begin to make investments or holding investments, I'm not going to be concerned with the intraday traffic of an investment. I'm not even going to be concerned with the intraday traffic or the intra-week traffic, right? I'm just not. It's going to be, a week-to-week view, maybe a month-to-month view, and hopefully a year-to-year view. What we're doing intraday is no fundamental analysis. It doesn't really matter. We might be interested to know that there's going to be a jobs number that could create some volatility. We might be interested to know that there's going to be the Fed minutes. We might be interested to know there's going to be a Jackson Hole meeting and Fed meetings and other announcements might be coming down the pike. But trying to guess what those announcements are, based on this or that, or what the market reaction is going to be is not something we're going to even concern ourselves with, because we have a front row seat and our members have a front row seat and can see and exploit the market action. Now, the regular folks don't like us doing it. They don't want you doing it. And but they can do what they want to do. They can believe that the people in DC and the people on Wall Street and the people on Madison Avenue have their best interests at heart, and they're going to take care of them. That's okay. I don't believe that for a moment. Not a moment. Not at all. So when we look at Swing Machine here today, it's been rather choppy overnight, very choppy, and probably waiting for these Fed minutes at 2 o'clock. We look at the VIX 5-minute interval, and it is long at 925. So we're thinking, that we want to be taking advantage of the short side of the market. And we are now currently in that position up there. We are short the NQ. We've had a run up of some 1480. We're still in the position. We're not going to overly trade it. And we're going to see if we can stay in sync here with swing. And again, we do have, I think, the Fed minutes coming out at 2, so there could be some market volatility. So I just wanted to punch up and say hello, give you a chance to see what the markets are. Let's give you a view of the VIX on a daily basis. It can tell us a lot, so let's do that. So we can see the VIX is at 40, and let's just change the 1 minute here for a moment to a daily view, and went long 4 days ago. And you can see on a daily view, the S&P is at 80. Now, that doesn't mean that it isn't going to go higher. No, it could go higher. It could get into euphoria. I mean, there's no governor on here saying that, it can't go beyond this point in time. But there's a couple of things here that we're interested in, namely, if the market was in proportion, then the VIX should be down here in the 20 area, down in this box, and it isn't. So that tells us that maybe this market is a little bit more, not in euphoria, but a little more heading, a little more euphoric than maybe it should be. So we have divergence, and I love divergences because divergence is one of the tools, if you don't always get it, but it can precede market changes, not volume, not stochastics necessarily, but divergence can, and we can get to see that divergence pretty easily. If we were to get into euphoria and the VIX sat here, then yeah, I'm going to be selling the S&P probably hand over fist. But we're selling it here. We are, but just not hand over fist, not quite yet. And we're going to use options going out 35 or 45 days. But we'll see how this plays out. The calendar is a little, problematic because of all the Fed activity And, with these options, you got to get yourself plenty of time because there's a time element to options. And so you got to get not just the direction right, not just the volatility right, but you've got to get the time, the timing right, the duration. And so they're a little bit more difficult. Let's just show you. Here is the Renko chart of the S&P. And we had to rebuild it. It got corrupted with a power failure last week. And this is the S&P. This is just about the overall high. This is the biggest high that we've had here in the last 6 months, couple of months, and it's at 5705. And you can see these little C points. These were C point buy, C point buy, C point sell, and all the sells. And each brick is $1,000. Now, there's a number of ways to trade this, a number of ways to trade it. It depends, like everything else, what are you trying to get done? And how are you going about doing it? And what are you using? But, if you were playing the C point, now this C point won't show up until price opens right here. I just want you to know that. Let me just show you. I'm going to, as an example here, maybe I should use yellow. Let me get a pencil. Bear with me here. I can try to get a pencil here. So this C, see the C point right here? That's called a C point. That won't show up until we get until that box opens right there. That one. Same thing here. This one won't show up until we get that one. That's when it'll show up. And so just stay with, whoops, bear with me. I didn't mean to do that. There we go. Let's just count. If you entered here and you played for one brick, could you have made yourself $1,000? Yes. So it's just, maybe we just put a check here. 1. Could you have made $1,000 on this trade? Why don't I just put it in the brick? 1. Could you have done it here? 2. Could you have made one here? 3. 4. 5. 6. 7. 8. 9. 10. 10 trades, 10 winners, 10,000. Now this goes back a few months, right? A few months. You're going to have the patience of Job. You probably wouldn't be real happy because you would have left a lot of money on the table. Not so much here. You would have left a lot of money on the table, a lot of money on the table, a lot here, and you certainly would have left a lot of money here. But in other places, not so much, right? They could have turned into losses. So it's always a, perspective, and that you have to learn and define how you want to play and what you want to be using. Maybe you're not using futures, maybe you're using options as an example. Let me erase some of these here. But we also have the Fibonacci's, and it hasn't played out the way that we had hoped here. We drew and that's the thing about Fibonacci's. They're a point of reference. We don't think they're necessarily that magical. They're not, but they can at least give you perspective. So we went from here to here. The 50% retracement that we felt we had to hold was 54.14, and we didn't hold it. That's not good. If you were bearish. We also drew a Fibonacci from here to here, and that Fibonacci was right in here, this yellow one here. So this was the area in here. We had it marked up. We had to rebuild it. But in here, that we were looking for the market to bounce out of here, but we did not want to see it get above. And it did. That's too bad. Especially too bad for anybody who got short down in here. That's they did what we call getting short in the hole, and they are now getting screwed. They could have held on maybe up into here, but once above, and that's who's buying this. The folks who got short in here. Now, anybody got short up here and up here playing for the bigger break, they're going to be hopefully hedging their bets, but they're going to be very focused on this, and they're going to be very focused on this. And if we don't pull back and they start to go, we could get something where these people capitulate, these people and hedge funds capitulate, and we get some sort of capitulation move that sends the market crazy up into here. Possible. I don't know. We never do know. So we just, play the market that we have at hand. Now, this is a very slow, this is actually a Renko chart with very big bricks. And, it's possible today that we don't even complete a brick. We just stay right here. So this is not an intraday view, right? This is more about what would be a daily swing trader or maybe even a weekly investor type of situation. So, but we do watch it and try to understand what people are thinking and or institutions, what they're doing. We're not going to ask ourselves why or anything. It just really doesn't matter. And let's bring this. I don't know why my little star moved there, but it did. I'll just erase it. So if you have any questions about who we are, what we're about, I'm going to shut up and let you watch. Feel free. If you want me to plug any market in or any stock in, I'm happy to do it. I hope you're getting done, I hope you're doing well. I hope you're getting done with whatever it is you're doing. If you're not, we invite you to visit Stock Market Caddy, look at the website, explore it. Because if you call, the first question I'm going to ask is, have you seen the website? I would hope you would, so you maximize your time. And then you still might have some questions. You're always welcome to call. We don't get every single trade right. Nobody does, not us. And we're not saying that. Also, too, I just want everyone to know, we're not an alert service. We're not giving out the fish. We're not telling anybody what they should be doing with their money, buying or selling any security or giving, we can map some things out and share with you kind of what we're thinking a little bit, but honestly, I'm not going to trade what I think. I'm going to guard against that. I don't want to get caught up in that trying to be right, or, we don't. We're just going to try to execute and follow the discipline that we have in front of us. And we have a whole lot of other tools. There's close to 60 or 70 of them now. And, that happened to be a Renko view, but you could be looking maybe at a point and figure view. You could be looking at other radars, any number. You may be trading futures. You may be trading micro futures. You may be trading options. So we got a lot of people doing a lot of different things. As long as they're getting done what they need to get done, and we're keeping score. We're all hopefully keeping score with what we call profit factor, and that's what we're trying to do. And every day is a new day. And so, if you have any questions, I'll shut up and listen, and happy to plug anything in. We'll see how this wants to play out. We'll be up until about it's 12:38, up until about 1 o'clock. Have fun. Once again, if anyone has any questions or want us to plug in any stock or any market into swing, and or if there's anything else that you want to see, just let us know. We're just giving you a chance to have a spot view. And we do have I think the Fed minutes are 2, so there could be a little bit of a catalyst for a market, a more sizable market move. It's been rather choppy overnight and much of this morning. We do think short term markets are extended. Doesn't mean they cannot go higher, though they can. Anybody who got short, what we call getting short in the hole, that waited for the VIX to spike and then shorted down in there, they've literally got their heads ripped off. And they're the ones buying up here. It's turned into a pain trade for them. And they have to cover or put more money in their account. That's who's buying. And when they're done, you can expect the market to come right back. Brutal game. bring everyone back to the Renko chart on the S&P. And we did this for our members too. This is the distinct run. This is where, there could have been a trap, which turned out to be a bear trap. We got this this pivot down, and it certainly appeared that, we're going to go after this area here. May not have though, because see, we never even got a C point sell because we had broken. If you notice, we came up, made a new high, made a new high, made a new high, made a new high, pulled back, did take that out, but then returned and took out the high. That was the concern. And then that C point there take us up. So we have conflicting, for those of you that like to use Fibonacci's and projections about, well, okay, well, now what? Well, the area that, and it's kind of a little interesting, we'll just come in here and let's get a Fibonacci retracement here. And what if we take the Fibonacci from here up to where we are right now? Now we haven't stopped going up, so it may continue, but from where we are right now, then we come back and say, okay, well, if this thing pulls back, where might it pull back to? It's still going to be valid if it can hold the about a 50% return. Where's the 50% return? Right on top of this 50%. So this is the struggle. This is the battle. And where is it? It's at 54.15. Because this one's 54.15, this one's 54.14. So who's going to win this arm wrestle? But we've got to stop going up and then see if we can come back, see if we can get here. And then there'll be a real battle royale over this level at 54.14. We get back under that, then everyone who got long up here will be coming out. Then we'll probably, that would be the one to get underway. But it hasn't happened yet. And it may not, I mean, we can certainly go up, and so we're going to just watch it, map it, exploit it when we can. And let's see if we can delete that. Nope, maybe I do it this way. There we go, get rid of it. So we're just sitting right here right now. Of course, intraday is intraday. And we'll just take, now we're going to watch this 5-minute. We won't go long, but we will. We're trading a little mechanically here right now, and we will close that position if we have to. The frustrating part of, when you put a trade on and it doesn't go your way, in our view, and we practice and share with everybody, you have to be prepared to let it go. You got to let it go, because there's also the lost opportunity. If you're trying to be right, I don't want to take another loss. I want to be right. I want to be right. You're better off just taking the hit, because you can have a loss opportunity. If you get yourself out of the way and take a small loss, and the market runs and runs and runs, at least you're not getting dry down. And then you have the firepower to short it. For instance, if you want to be shorting when the next signal comes at maybe a more significant level or a higher level. But if you stubbornly stay on a position when you're trading mechanically and getting all emotional about it and making decisions off emotion, and I got to be right, then they're just going to grind you up. They're absolutely going to grind you. And if you're putting on trades and in your process or whatever it is you're following isn't clearly defined for you, and you're making a decision on the money time and time again, they're also going to get you, because you don't have a discipline on it, and it's all emotion. It'll be very, very frustrating. I'm watching that, and there's the NQ. We cover the trade. I'm not going to go long. I'm not. I have the VIX long. I don't trust it here, just from the radar, so I'll sit out. She comes back and the 5 minute gives me a short signal, then I'll go ahead and take it. But otherwise, I won't. Take the small loss and be done with it. And we wait. A lot of waiting. Okay, so we only got about 4 or 5 minutes left. And any questions, let me know. Want me to punch in anything? Happy to do it. And let me see if I can show you. All kinds of things that we could show you. Let's go to the option tool. Maybe folks looking for some option opportunities. And let's go find it. This is the options club selector. And do we have any longs? Yeah, we got a this would have shown up last night, a put credit spread on Kroger. Not much, not much on the long side. Over here, and this is interesting, you see these little phantom vignettes, they've kind of moved out of here. And but on there are a lot of puts. And the machine is making a decision. It's giving a suggestion. The direction is down. They're playing for the pullback, but they're telling you, should it be a put debit spread? Should it be a call credit spread? Or should it just be buying a put? And it's on these stocks. So you might want to look at some of those, including Netflix. So that could be interesting up here at 700, basically $700 a share. And it's saying to buy a put debit spread. Now you could buy a put, you could sell a call credit spread. We kind of like selling call credit spreads, but that's what we would be looking to do and where we get it from. On PayPal, yeah, let's go look. Let's go to the NASDAQ 100. And question is about PayPal. So let's go get PayPal. How is Swing Machine positioned on PayPal? So PayPal has had a bit of a run, and let's go get it. I think it's in here. Here it is. So let's bring it up in here. We'll bring it up to the top. So here's PayPal. Yep, PayPal on a daily basis. Swing Machine went long PayPal 16 days ago. 16 days ago. So Jimmy, if you had an interest in PayPal and you were watching it, you would have got a daily signal to get long at 65.78 back on July 31st. And you would be up if you put in $10,000, you'd be up 872. If you had used options, you'd probably be up a lot more. The percent return between the entry price and where PayPal is now is 870. Yep. The trend is solidly up. I wouldn't short it, but in the fear gauge, you're at 80. So, I'm not, I'm probably not going to sell it. I'm not going to short it. You got it at 57. Oh, you're good. Yeah, you're good. What I would do if if you had Swing Machine on here, if she pushed up into euphoria, I would, I'd do one of two or three different things. I might close the position, maybe not. I might take half off, maybe, or more than likely, I might sell covered calls against it. So she's trading at where is she trading at? She's trading at 71. Um, and I'm thinking she's a little rich here and the market might pull back. She might pull back. I might go out about 35 to 45 days and I might go up 1 or 2 strikes. NH, I'm holding for one. No, I'm hold. Oh, okay. You hold. Okay. Well, that's fine. I mean, I hope you get it. You know, I hope you get it. But you asked a question. That's how we would do it. The most recent signals. Let's see here. Let's bring this up. We can show you. No, we sorted the wrong way. Oh, sorry. So we can show you. The INDX went long itself 3 days ago. IDEX 3 days ago. So this is where we would get them. And then as you can see in the beginning, in the first few days, they may be working, maybe not, but watch what happens over the first 3 weeks. We come down, we got 7 days, 8 days. Now, some of these are short too. And 14 days, 21 days. The biggest one is going to be a short on Intel, 30%. So we don't get emotionally attached to anything. We're just trying to extract cash flow. We really, it's just a horse. It just doesn't matter to us. And so this 3 minute, if I got stubborn and said, oh, I still think it's going to be a sell here, I would be getting drawn down. Right? I'd be in no man's land. I don't like going against swing machine. It actually makes me uncomfortable to be on a trade that's in its opposite direction. Really don't like it. Now you can decide, you can say now if you wanted to stay really, really tight and so this is also, you got to think about this. When I'm not challenging anybody's beliefs, right? So you can, but when you're trading, different from investing, right? So if I'm going to make an investment, I'm going to buy PayPal or invest in PayPal, probably not just on a daily view. I'm going to want to see the monthly view of it. So in fact, let's just play along here. Let's put we'll stay on this view. Let me punch in well, I'll tell you what, we'll go back. Let's go back to PayPal. Here's the NASDAQ. Oh hell. I'm sorry, that got corrupted there. Here's PayPal. So all right, so we can change PayPal. I hope it's just going to be PayPal to a weekly view. So PayPal is long on a daily. But if I'm thinking about an investment, and I hope it's going to comport to what Jimmy wants, but I don't know. So this is what I would do. I would want to see the weekly. All right. So the weekly is trying to get long right now. So that's good. That would be good. Because if I'm going to invest, I really want to see that weekly confirm. So it needs another week or two, So it is definitely acting better. Where is it on a monthly? And so in the monthly, she's been trashed. But you're trying to catch, the pivot. So the monthly, she's been short for 29 months. And she shorted at 87.93. 87.93. So the daily is good. You just want to, and the weekly hasn't gone yet. If we're looking just at the probabilities, the likelihood is she'll fail. I don't mean to upset you, but I hope I don't. But the likelihood is that she fails. And if the weekly doesn't confirm and she goes down, the monthly and the weekly will pull it down because it's just the way it works on the larger trend. But if the weekly takes hold, then and it's fine. You kind of want to. I would take. Yeah, exactly. I would put all my stocks into Swing Machine if you wanted to be looking, and you're going to want monthly, all the monthly and weekly shorts maybe, and then you get when they come up and out, on a daily, you say, hey, I'm going to take a shot at these, and you get them as they come out. And totally with you there. But that's what we would do. But as she gets up to 87, if she does continue, and I hope you get 100, but I got to tell you, if she gets to 87, I think she's going to hit some resistance because you're going to have some monthly folks that want their money out that have, been really, really trashed. And, but we'll see, we'll see. But that's how we would begin to look at it. And the other piece is what we're going to be doing is when you're trading, when you look at it, when you're going to school, when you're walking to junior high in Boston and it's in the wintertime and the school is 2 miles and you don't want to be taking a bus, which I never took a bus, never sat on a bus, always walked. You always want to take, the most direct route, right? So when you're investing or you put on a trade on a stock, you want it to go straight up. That's what you want. And you want it to go from, 70 to 100. I get it. But when you're trading, much like you want to get to the school as fast as you can, you want to take the most direct route. But when you're trading, you're okay with it doing something like this, Because yes, if you buy it here, and she gets to 100, you get to the same place, but she may not. But you can also make money here, here, and here, and here, and here. And you may not be in it, and your money may not be tied up as long, and you can be deploying your money into other trades, right? So that's kind of how I think about it. So I don't get enamored with any one thing, unless it's a long-term investment. And I'm having a very, very hard time being invested in anything right now in the S&P or in the NASDAQ because, they're just so extended. And when you look at the Renko, the S&P is right here. We may sit here for 3 days and you won't get another brick, right? This is not an intraday view. You can do this intraday, but this is the price action on a daily basis, using Renko. She could just sit right here. Jimmy, thanks for your question. I'm gonna say goodbye to everybody. I got to catch up with Susie and get some things done. But we wanted to punch up, give you a chance to see what you wanted to see, and be sure to visit the site and give us a shout if we can answer any questions. And again, 2 o'clock. Um, I believe, I don't track this stuff. I really don't. I get a passing view. I mean, we're going to see the reaction probably come minutes before. Somebody's usually got something. If not before. Um, at 2 o'clock. I don't know if there's any more numbers. You're always looking for catalysts. We like catalysts. We're not trying to guess what they're going to do. We just like the movement. What I don't like is, when things just, stagnate. Remember, tops are a rounding process. They kind of round out. They kind of take their time. That's a rounding process, and they kind of curve over. Bottoms are mostly V bottoms, very, very sharp, just like what we had, down, 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 boom, V bottom, right back up, just rip them back up. And it's a function of the options market and leverage. Purely, that's all it is in our view. Enjoy, everybody. Have fun.